What's up, gang? It's Carlton Flowers, your crypto pro, and I've got an emergency video for you today. We've got new FUD that is breaking on social media. Apparently, the U.S. Treasury says that cryptocurrencies pose a serious tax evasion risk and calls for crypto transfers over $10,000 to be reported to the IRS. Now, I don't know if this is true or not, but this is a pretty good and powerful FUD story. Anytime you mention the IRS, that's going to scare people half out of their wits. Now, that makes me nervous myself because I certainly don't want to give up all of my gains to the IRS, and I don't like the whole idea of being tracked every which way but loose. Now, back to the story. The chart here. I've been monitoring this chart since last night. I even got up at 3 a.m. because I wanted to see where we were, because we had this bounce down here when we hit about 35,000. We had this bounce and a move up, and I did not trust it. And the reason was this. Once we got to the top of this small little move, I noticed that the stochastic was already at about the 65% point in the cycle. And I thought to myself, that cycle on these oscillators is way too high, and it's not returning enough of a gain on the price line. So in other words, let me explain this. What I would expect is this. Getting to just this point right here, I would have thought that the stochastic would just be getting started right about here. But we got 2/3 of the way already up the cycle without the price going any further up. And so in order to say, hey, this is a change in direction, a change in trend where we're breaking out of this downward trending parallel trading channel, I would like to see the price break out of that with this big of a jump in the stochastic. We should be out here somewhere, possibly crossing this magical 3.618 fib circle ring. We're going to talk more about that in a minute. But instead, we get up to the top of this stochastic cycle, which it looks like we're not even going to make it up here into the oversold zone, because it appears that the fast line, %K, is about to cross over the slow line, the %D. It's curling over. The crossover has not occurred yet, but it looks like it is imminent. If that happens, which I think it will, because this red candle is big enough right here to complete that crossover unless we get a nice little bounce and a continuation of the upward move, I think we're going to be headed down. And where will it go? Well, if the cycle goes all the way back down and we get down here to the oversold zone, we could cross and hit this fib circle ring, this magical ring, at which point I think we're going to get a pivot. It's either going to be a nice bounce upward and we continue this breakout move, or we break out of the downtrend rather, or we're going to sail on down and maybe retest 30,000 or lower. That's a critical point right there. It's too early to tell, but getting this red candle out of nowhere where it just takes a complete turn and a dive and not, say, a rounded move, that is what concerns me. Now, here's what else that we have to look at is the 1 hour. When we look at the 1 hour chart, this was a lot more telling earlier. And when I noticed the crossover that happened on the 1 hour right here, we had 2 red bars printed. And I thought, okay, when this dips on over and starts to jump down here into the neutral zone, it could probably bring us a drop, which it is. So the red candle is growing. And then we have a confirmation coming on the MACD on the 1 hour as the fast line is about to cross over the slow line on the oscillators. And the histogram is approaching the 0 line here. So once this crossover happens, we're probably going to get another full cycle down on the MACD. So that confirms that the momentum, at least on the 1 hour chart, is downward. Now, when we go back to the 4 hour, let me make another point. The reason why I am suspicious of this stochastic and where we are in the cycle is that we should get much better gains out of a move up that much. Now, let me scrunch this price line in and let's see if we can shop and compare and see a difference. Whoops, our zoom is not working right, between the stochastic peaks before and the stochastic peaks when we're going into this side banding downtrend. So let's draw. Here we go. When we were in this previous run, we see that when the stochastic made this nice push upward, we had a nice run all the way up to this point. The next two peaks here and here brought nice increases and higher highs. All right. Now, when we looked at this downtrend, when we started to move down and the stochastic did not make it up, and it was at about the 65% point, the same place that we are right here, right now, we noticed that the price that came up was just this little jump, and then we continued on to go down. The next several stochastic peaks were not as impressive, even though this peak brought us back to the point of beginning, even though it was a lower high. But this one brought a higher high, but it did not take out the previous high. Here's another peak here, and incrementally, it was giving diminishing returns. So that's what concerns me here. We got a crossover happening, and we did not get much bang for our buck. We stopped right there and we pivoted, which tells me we are still in the downward trending trading channel, and we have a death cross here on the 4-hour. Now, a death cross on the 4-hour chart is not as near severe as when you have a death cross on the 1-day chart. But nevertheless, the 50 EMA line has crossed the 200 EMA line, and we have a divergence. In other words, the gap between the two is getting bigger as we go down. That says downward momentum is confirmed. Now, just since I started talking, look at the MACD oscillators. Do you notice this? Look at that percent K line curling over. We might have another crossover coming of the oscillators with the MACD, which would confirm once we get this crossover on the stochastic. If this curls around, downward momentum, I would say we are headed at least towards the intersection of the price and the magical 3.618 fib circle boundary, which these fibs are amazing, and they do predict pivot points. I've been using these for years. In fact, I started using fib circles way back in 1999 when I was playing around on the OTCBB, when I was playing penny stocks. That's where I learned how to do TA. Now, let's get rid of this and just jump out to the 1 day and see what we have here on the 1 day. And again, this is just since the video started. It looks like the percent K, the fast line, is starting to possibly, I can't tell if that's the dash or not. Maybe that's just the dash, but it's not looking like it's curling over yet. But what do we have on the MACD? We have an increasing divergence of the fast and the slow line. See this gap here, how it's getting wider? That tells me that we have downward momentum. So I can't trust that this is a V-shaped recovery, which would look like this with this bounce of the green candle. I can't trust that while I'm staring at this ugly MACD. Now, the stochastic says, yeah, this could be a V-shaped recovery. I could say that that is something that is indicative of a bounce and a recovery, but not that MACD. So we're going to have to wait and watch. It's too early to tell, but let's keep our eyes peeled. And one thing that I would caution everyone on, because it's so easy to believe the big mouths on YouTube when they say, we're going to break out and run to 70,000 right now. Now, several hours ago, we had some videos that came out where they were calling for a breakout and an all-out bullish run and a romp back to 70,000. And then, as soon as I checked out the chart, I noticed this action with the stochastic, and then there came the red candle. So that just means you can't always trust what you hear because they can get it wrong. Now, this is definitely not financial advice. Don't make any decisions based on what you hear me saying in this video. I can only call them like I see them. And I am one that is very stingy with my money, and I don't like parting ways with my money. And that is why I'm cautious with making decisions. Now, if we continue to go down, I'm going to start shopping and dollar cost averaging on all of the positions that I have and grabbing the bags of projects that I wish I could have had before. So if we get a big nasty drop and we break 30,000, it's a good thing, because that means I am practically rolling back the clock to the past, and I'm getting a second chance at accumulation. Last but not least, last point I want to make. there's people saying that if we break 30,000 or 25,000, that's the end of the bull market. I personally don't believe that. I think we could go all the way down to 20,000 and that's still not a break of the bull market, because that is just the resistance of the all-time high in 2017. We're still in a bullish market overall if we stay above 20,000. So I am going to accumulate. But again, don't take it from me. Make your own decisions and don't play in this market with money that you don't have to lose, or you'll be kicking yourself. So that's all I have for now. I'd love to hear your thoughts and comments. Let me know what you think is going to happen here and if this red candle will continue, or do you think we're going to bounce out of this and move up again? That's all I got for now. This is Carlton Flowers, your Crypto Pro, and I am out.